Good morning, folks, and welcome back to Almus Market Mornings. I like that song by Green Day. It's called Wake Me Up When September Ends. And I think that's what some market participants, especially the bond traders, must be feeling. The ultra long yields have been rising. There has been spikes in the 30-year yields of UK, Japan, EU, all of which has put pressure on the US yields as well. Rising yields and that too of this long of a maturity is very significant. In fact, we also had a sudden spike in dollar index yesterday. Euro and especially the sterling had a fall against the greenback. Sterling lost more than 1%, and all of this happened in a matter of few hours. Gold has continued to rally, closing and making fresh all-time highs. And when it comes to USD INR, an excursion below 88 quickly found dollar buyers pushing prices back above rupees 88.20 yesterday. Uh, Good morning, JK. Why are we seeing this spike in yields, and what do you make of this dollar strength that came in yesterday? Like, what are the reasons behind it?
Good morning, Swaraj. Yeah, you're right about September because the data shows that in the last 9 years, September has on an average given negative return. So people cannot shake off the history so easily. And we know that market has been trading long side of bonds, long side of stocks, and also long side of currencies. And Labor Day holiday normally marks a significant point, a turning point for the markets many a times. And we it's too early to say that there is a turning point, but definitely the first day after the US summer break has now seen different moves from what we have been used to. Yes, speaking specifically of the bond yields, definitely there are problems both in UK, Japan, and to some extent in Europe as well. UK has nearly 5% fiscal deficit, and the debt to GDP is closer to 95%, and their growth is tepid. Funding costs are higher. There is an upcoming budget in UK. Markets are jittery how they are going to fund the huge fiscal hole. And so that's the reason why bond yields went up in UK. In Japan, the position is even almost similar, or if not worse. The debt to GDP ratio is 255%. They have a fiscal deficit of over 5%. And there also, despite the rates being at near zero for a long time, that's the official rate, the market funding costs are much higher, the yields are much higher. In both UK and Japan, the 30-year yields are trading at multi-year highs. And in UK, it is at the highest since 1998 as well. Europe has its share of the problem. France is struggling to get its budget passed. If it is not passed, there's going to be a political instability. And of course, Europe is also looking to raise a huge amount of money to fund them for the war, for defense, as well as for infrastructure. And this would require multi-trillion, fundraising by the government. And market is wondering how what kind of rise in yields will be seen because of this huge supply of paper in Europe. So all in all, these are the background in which the yields have risen. Yesterday, markets have woken up to the fact that these problems cannot be overcome so easily, and it had its own impact on the US market as well as they opened. While the US yields did not rise much because we are still in a situation where US Fed is going to cut rate for the first time after a year in September. That's the reason why US sales did not go up, but they still went up. And you have the overall bond market not looking great. And talking of US rates, as we enter the non-farm payroll, as we get closer to the non-farm payroll report, if the report comes worse than July, so talks are that even Fed may go for a 50 basis point cut as well. So that is the reason why US markets are somewhat stable or relatively stable in the bond market. However, it was not so as far as the stocks are concerned. People have been seen selling stocks. It, of course, taking profit at such high levels of valuation is quite reasonable. Not a big fall, of course, closer to 1% in the major indices in the US, and that has also dragged the other indices lower. Germany, for instance, was down about 2.5% yesterday. So that's another market which fell. And then the dollar, which has been on the ropes for quite some time throughout the year, having fallen more than 11% in terms of dollar index, and in terms of euro rising more than 13%. Saw some profit taking yesterday, particularly the euro not being able to hold above 1.17 sustainably. Saw some sell off. UK hit by the fiscal concerns as we head into the UK budget in the coming days. And Japan, of course, there is some political problem as well, because one of the leaders of the ruling party also resigned. So there is, apart from these individual countries' problems, there was also risk off sentiment overall, which led to some dollar demand. No doubt, dollar buyback of huge after a huge short positions in the market is something that is not out of the realms of thinking. So that's where we were yesterday. Yes, market moves into very significant data period, particularly in terms of US data. Yesterday's ISM manufacturing in the US showed that the employment picture was still grim, and even the new orders were somewhat better, but market is more hooked onto the price pressures as well as the employment situation. In terms of the price, manufacturers surveyed have told that they are looking to pass on the higher cost of imported goods. So that's not a good news as far as US is concerned. As far as India is concerned, yes, backed by a few factors, like we had some bond market related inflow from some foreign banks, with that led to the rupee gaining up to 87.85, which was earlier resistance. Now it turned into a support. Apart from the supply of bond market related flows, there was also a few factors that the market was looking at. The court ruling, calling the Trump tariff as illegal, even as he heads for appeal into the Supreme Court. And then the other factor was that the trade minister in India said the ongoing and the talks with US for a trade agreement, broader trade agreement, was ongoing, and somewhere in the end, before the end of this year, it is expected. They are not keeping any timeline for conclusion of the deal, but that is again another factor that the market was looking at as well. Last week, Trump had also indicated that India has been charging record tariff on US goods imported into India, and now they have almost led into near nil. But it is too late. That's what he said. But again, market sees these factors as some opening for an improvement in the trade tariff, and because the market in the USD INR has been almost moving one-sided, rupee has been so much underperforming that any positive news can result in a swift down move in the USD INR. And the market is not positioned for it. Hence, we see that any flows result in a slightly larger than usual movement in the USD INR. But then the trend is not changed. We found good demand at 87.85 and took the rate to 88.20 once again. But does look like market will be slightly cautious about going long in the dollar at these levels, unless there is a fresh bout of bad news, and they remain alert for any turnaround in the news. Yes, finally, gold continues to shine. High of 3547, an all-time new high, has been seen. Sees no change in the trend. The risk of sentiment in the bond and the stock market also has also helped. So even the overbought condition in the gold, which has risen almost 45% in the last 1 year, is not deterring play investors from piling onto the yellow metal. I would say that more than the buying, the lack of sellers that is pushing the market higher, even with a small amount of bids. So that's a huge trend that is in place. Yes, so overall, we look forward to the data from US from today onwards. Thank you.
Thank you, JK. And JK, we have labor market data starting today, right?
Yes, the JOLTS data will be out today. The job openings is expected to be weaker, and the quits rate is also likely to be lower. So lower quits means people are hesitant to leave their current jobs because there's difficulty in finding new jobs. And tomorrow we will have the ADP private payroll report as well. Finally, on Friday we have the non-farm payrolls report.
Understood, JK. And all of this data. Yesterday, we also had the ISM manufacturing survey, with JK highlighted, had a weak employment report. And starting today, we have all these employment reports from the US till Friday for the non-farm payroll. And of course, people would be watching out for any sort of revisions. Till then, attention is also on the bond markets, because the higher fiscal deficit and higher debt levels of countries like UK, EU, and Japan, they are pushing up the borrowing costs. So the yields are rising quite significantly. Dollar yesterday saw some profit taking. Dollar short saw some profit taking, and euro was not able to hold above 1.17, and we saw a quick fall over there. Gold, it continues to rally. It has not seen any change in trend. The risk of sentiment in the bond and the stock market has also helped its rally. That's it from us today. Thank you for listening. We'll catch up tomorrow with a fresh round of updates.